Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely is Phil Mackintosh. He's our chief economist at Nasdaq to review how policymakers and investors are starting to model out the global economic impact of the coronavirus as the race is on to mitigate the spread of the virus and provide stability to the markets, consumers, and the economy. Now, Phil, stocks opened lower only to trade to about session highs as of 10:45 a.m. Eastern as the major averages closed their worst quarter since 2008. So let's take a look at the number of new cases and market internals. It seems as if the extreme swings have calmed down for the moment.
Yeah, and I think that's because the number of new cases has calmed down in terms of the growth rate. I mean, it's still a phenomenal number, 60-odd thousand cases a day, but it's running at about the same level for quite a few days in a row now. Italy has seen a notable drop in cases. Some of the hotspots in the US have seen a notable drop in cases. So there's some evidence coming through that the social distancing that the developed markets are deploying is starting to work, and that's a positive, that's for sure. But on the flip side, it's not working as fast as what we saw in China and Korea. And so that leaves a lot of questions open as to how long people are going to be working from home and not working in things like restaurants and airlines.
And we're starting to see this in the real data. I mean, we got our jobs number last week, record claims of about 3.3 million, but we're getting new data this week that's showing the impacts of the COVID-19 shutdowns.
Yeah, the New York Fed and a lot of the other Feds had some data on purchasing manager indexes yesterday, and it was pretty dire. But that's expected because that's exactly what we saw happen in China as well. At the same time, this week we've seen some of the China data bounce back because they're obviously a month in front of us in terms of getting through this. And so I think that's what everybody's looking at is maybe this is a 1 month slowdown, it's a big slowdown. Or is it a 6 week or is it an 8 week slowdown? And that could make a little bit of a difference. But if we can still see light at the end of the tunnel and we can still see ourselves bounce back like it looks like the Chinese data is starting to, there's some hope for us. Obviously, to your point, I mean, a lot of the data is off the charts bad, and we're going to get ISM numbers, ISM index numbers on Wednesday. We're going to get jobless claims later this week and payroll data later this week. But I think the market already expects it to be bad. That's why we sold off the last 3 weeks. There's already reports that retailers might be going to furlough another 500,000 workers. So I wouldn't expect the payroll data at the end of the week to look that good. But the market knows that.
Yeah, it probably has been priced in to a certain extent. Now, many stock pickers, they've turned to more granular data to show whether it's broad-based or if there's opportunities in some stocks or some segments. And in our next chart here, it shows that data with the shift to online spending has benefited certain sectors in the economy.
Yeah, and that makes total sense. And even the media is starting to talk about this. I mean, there is definitely places where people are spending more money than normal. When you look at the rush to grocery stores and the crowding out effect that's happening there is a lot of people spending more on groceries than they normally would. I guess that's to make up for the spending on restaurants they're not doing. But there is other signs that it's not like all online retailers doing better. Some of the apparel retailers are seeing less sales, and at least no one needs to buy suits if they're not going to work, so to speak.
All right, and we always like to end on a positive note here, and there is data showing in our final chart that jobs are out there.
Yeah, and this kind of speaks to the point you made last, which is there are some industries that are actually really busy, and they're not surprising. It's the pharmacies and groceries are really busy. Anyone doing deliveries, the logistics is really busy, and obviously medical, the whole supply chain is going to be really busy. So there's actually quite a lot of jobs there. That's why the healthcare sector has actually outperformed the broader market. And you can start to see the stock pickers have already been buying the stocks that look like they're better positioned for this kind of a slowdown than the stocks that are going to be most hurt.
All right, Phil, appreciate the insight as always. Thank you so much.
You're welcome, Jill.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.